That's right, it's everyone's two favorite topics in one video, insurance and EIFS. YouTube's gonna have to ramp up server capacity to meet the demand for this one. But seriously, if you're watching this, it's an important topic, and if you've been in the EIFS game for a while, then you're likely familiar with the challenge of finding affordable insurance coverage. And if you're just starting out as an EIFS applicator, you may be tempted to just go and buy an off-the-shelf policy online, but beware, virtually all of those off-the-shelf policies come with a standard EIFS exclusion. This means that the relatively cheap policy you can get with just a few clicks may end up being a complete waste of money because you are essentially paying for an insurance policy that doesn't actually provide any insurance. Okay, so why is this the case and what else should you know? Well, let's dig in. Hi folks, my name is Eric Lonsinger with Ford Insurance, and people ask all the time, why is EIFS insurance so expensive? Now, to answer this question, we actually need to start with a different question, and that one is, why is it standard practice for insurance companies to exclude EIFS coverage on general liability policies? Now, without diving into a boring history lesson, the short version is this. Back in the 90s, there was a surge of EIFS claims, and they often ended up being very costly. Many insurance companies simply made the decision that EIFS just wasn't worth the risk, and they began excluding it from their policies. This trend resulted in far fewer companies willing to even provide coverage for EIFS, and the ones that did would typically charge very, very high premiums. Fast forward a few years, and the environment has softened a bit. Advancements in EIFS technology, along with investments in training and education, have resulted in far fewer claims. But the insurance industry tends to have a long memory and be slow moving. EIFS coverage has become more readily available, but still at relatively high prices and still not offered by many of the mainstream insurance companies. Making things worse, in recent years, we have seen EIFS premiums begin to climb again, but to be fair, so has just about every other type of insurance. At the end of the day, the fact remains there are relatively few companies willing to insure EIFS operations, and the ones that will generally do charge higher premiums. Okay, so what else should you know? Let's talk about minimum premium. You may come across this term when applying for a policy. Minimum premium. Sounds good, right? Not so much. Something to be aware of, especially if you're a smaller contractor or if EIFS only makes up a small portion of your business, is that liability policies are typically rated on the amount of exposure, usually expressed in terms of revenue or payroll. The more revenue or payroll you have for a given type of work, the more premium that will be charged for it. Makes sense. Most EIFS policies behave the same way, but are subject to a minimum premium, which is the lowest amount of premium the carrier will write the policy for, regardless of how little exposure you have. So think about this. If you only do one EIFS job per year, and say that's about 10% of your total work, it doesn't matter. You are still going to pay that minimum premium. Kind of like a blind or an ante when playing a hand of poker. Depending on the carrier, this minimum premium can actually be quite high, often starting at a minimum of $5,000. Now, this is an important consideration I review with all my clients. Is the cost worth the benefit? Do you have enough EIFS business to make the expense worth it? Let's assume the answer is yes. So what's next? Limitations. Now, to further complicate matters, many EIFS policies are structured in a way that includes a lot of restrictions, such as residential exclusions, limitations on other types of work, and even exclusions for work in certain states. There is a trade-off, however. The more exclusions an EIFS policy contains, the more affordable it typically will be, which makes sense because these exclusions are essentially limiting the amount of risk an insurance company is taking on, and therefore it's reflected in the premium they charge you. The downside here is that it may become necessary to maintain and pay for multiple general liability policies to provide coverage for all of your business's exposures. This is why it's crucial to work with an agent or a broker who is familiar with EIFS insurance. They can help you put together a package that makes sense for you and your business. Now for my favorite topic, certificates. So fair warning, this is going to be a little bit of a rant. So certificates of insurance, or COIs, I mean, we all love them, right? What many people don't realize or really care about is that while a certificate does provide proof of insurance, it does not always clearly represent what that insurance covers. So savvy GCs will often provide a list of insurance requirements and push for policy details, but that's not always the case. Now, a certificate of insurance is a standard form with a limited amount of space to include information about your policies and their limits. There is a description area at the bottom or on the second page where an agent or broker can add all of the juicy details of a policy, like any of the limitations or exclusions we just talked about. But it is up to the agent to provide that information. In practice, agents have different standards and procedures on how they issue certificates. Some are very detailed, outlining coverages, restrictions, and including forms and policy documents, while others tend to do the bare minimum, like 15 pieces of flair. Comment if you know that reference. The issue here is that unless the agent or broker provides detailed descriptions of coverage, there's no way to know exactly what is covered or excluded by a policy just by looking at their certificate. Bringing this back to EIFS coverage, as I just mentioned, just about all standard general liability policies exclude EIFS. So if you're a GC and get a certificate from a potential EIFS sub, make sure you review the certificate closely and verify that their policy actually covers EIFS. And if it does, then it's important to understand what restrictions or exclusions come along with it. If you're interested to learn more on how to understand insurance certificates, and I know you are, then keep an eye out for our next video, which will deep dive into it, including all-time favorites such as additional insured status, primary non-contributory, and waiver of subrogation. Okay, so where does that leave us? Well, I'll say it again and again. Find an agent who knows EIFS. This is your first and most important step to getting the right coverage. It's also important to have realistic expectations. EIFS insurance is going to be more expensive compared to a typical general liability policy. It just is. With that said, there are a few things you can do to make the process easier. First, insurance companies want to understand your experience with EIFS. Where were you trained? What education programs have you completed? What certifications do you hold? Be sure to have this documented and available. Many carriers will also ask for a list of completed or planned EIFS jobs, including a description of work, location, job value, and date. Next, clearly communicate your requirements. For example, if residential work is a must for you, then make sure you tell your agent. This will dictate which insurance companies should be approached and help set better expectations in terms of cost. There are also strategies you may consider to minimize your premium rating. Again, these are subject to those minimum premium requirements, but for example, if you're an LLC, then it may be advantageous to find an insurance company that rates on payroll, since LLC members can report a minimum payroll value, but rules vary by state. At the end of the day, I know this can be a difficult pill to swallow, especially for smaller EIFS applicators. Fortunately, there are reasonable options out there, and knowledgeable agents are your best resource to find them. So, well, that does it for today. I hope you found this video useful, and if you did, well, you know what to do.